all these newsmakers and earnings movers are the ones which are jumping up. But let's welcome on board Pradip Kumar Das, CMD at IREDA, and talk about how their quarter was. Mr. Das, great to have you in the show. First things first, your meeting on 23rd, as we understand, and a fundraise via QIP is what's on the plan. Tell me, how much money are you looking to raise? Because you've already received that in principle approval of 4,500 crore rupees of a fundraise, right?
Yeah. When we had very good morning and thank you for inviting. And when we had given initially a tentative figure of 4,500, so board meeting on 23rd. So then board will deliberate and take a call finally. So certainly it will be 4,500 and maybe something slightly more than that. But final figure will be determined and decided by the board. So I prefer to leave it to the board to decide rather than me now talking on that point. And the kind of growth what we are having and what we have exhibited continuously last 4.5 years. And perhaps it seems like that every year we need equity infusion. In you see March 22, we had 1,500 crore equity by Government of India. And then 23, we had again this IPO. And this year again, we are going for QIP. And since our growth is in the range of 36% loan book, if you see our CAGR loan book growth of 5 years is 27%. Against that, this year we are already having 36 year-on-year comparison growth. So trend is there, and the sector is also growing, and already almost 50 gigawatt bidding has already been done. And out of that, 42% of that PP has already been signed. So a lot of project in pipeline, and we are confident that this sector is going to continue this kind of growth momentum. And in addition to maintaining and sustaining a healthy growth, we have focused on 360-degree improvement in corporate governance. And as a matter of fact, this year, we're happy to say that in just 9 days, we could complete our full audited results and published, and that is quickest in any corporate in India. So this is a historic benchmark we have set for ourselves. And basic purpose of talking about corporate governance is in a project finance company, and 76% loan book is largely by private sectors, and hardly 24% with government sector. And it is new and emerging challenging sectors we are addressing. If you see in our book, almost 20% is new and emerging space, 80% is coming in vanilla area, including the state utility. So therefore, maintaining a number growth is important, but more important is that ensuring qualitative corporate governance so that the investor will be at peace. So that is what we are continuing, and we are going to continue that momentum in the time to come also.
That's Srishti also joining us, but help us understand that other than QIP, what are the other fundraising plans for the company? Anything that is lined up or likely that you are working with?
Last couple of days back, we had raised debt funding of 1330 crore, and that is a routine activity kind of thing. Every month we go to debt market and raise funds through bonds, and we have a pipeline of bank loans also. So basically, 3 sources we are looking for: QIP, bond market, and bank loan. We have the sources for us, and we have been successful in continuously reducing our borrowing cost vis-a-vis the market, what is prevailing at. And in addition to the equity market shareholders' trust and confidence on us, we have also seen the debt investors' the confidence and trust in us, and they have started liking investing more and more in IREDA. And a lot of institutions also have taken interest in coming into the debt investment in IREDA.
Hi, Sir Nikunj also joining in. But can I say that from a market standpoint, the fact that you're doing a QIP is not because you need capital. This is largely because you need to comply with the government listing norms. Is that the reason why you're doing a QIP?
No, I think I partially disagree with you. We need equity capital also. See, without having capital, we cannot go for further borrowing. If you cannot have borrowing, then how are we going to lend? And moreover, this CRA requirement, that is for healthy governance. And we being new and emerging space largely, and our ministry also looking into all the time alternate sourcing of electricity sources. So therefore, always we'll be carrying that challenge. So we need to ensure a healthy CRAR. We need to ensure that triple stable continuity with us, what we are enjoying last 2 years, and also international rating, which is at par with the sovereign rating. So therefore, we need equity capital, not only for CRAR, but also for our further fundraising.
IREDA is in the business of financing green and clean projects. Can you give me a breakup of that? Which is that how much of your current lending book is pure power utility? How much are EPC and project executors? How much is in the area of solar and renewable? Can you just give me a broad sense as to how much is to utilities, how much is to EPC, how much is to essentially other areas of green and green?
69,000 crore, we have 26% solar, 16% wind, hybrid solar and wind 3%, hydropower 12%, ethanol 8%, biomass and cogen 2%, waste to energy and energy efficiency 1%, manufacturing 6%, e-vehicles 1%, loan facility to state utilities for their against their REDUs, that is 21%, a short-term and medium-term loan to private and EPC, that is around 2%, and others miscellaneous is 3%.
Solar is 26%, if I could just take a leaf from your answer. Now, solar is a sector where in the near term the growth is strong, but that sector is also protected heavily by duty. Couldn't that be a risk going forward, that what if the China duty protection is stopped? What if there is a global tax change in terms of the tariff regime? Because solar is a high growth sector, but in India it is a sector which is protected. Couldn't that be a challenge for a lender like you, that you're lending to a sector which is protected by duty?
See, frankly, we have been heavily dependent on, particularly in one country, for our solar requirement. And Government of India has built up a nice ecosystem in the last 4-5 years. And through PLI and even otherwise also, a lot of developers have taken interest in setting up the manufacturing setup. And maybe around 100 gigawatt capacity, manufacturing capacity will be in the country in last 2 to 3 years. So our target is to have that Atmanirbhar Bharat. And we need to have that self-reliance. And a fair amount of opportunity, not only in domestic, but also in overseas export market is there for our Indian manufacturers. We have some borrowers with us. They are more than 2.5 decades with us. And they are not only selling their product in domestically, they are also exporting. Despite having largely dependent on India requirement on one particular or couple of countries, see, our promoters are also exporting to overseas. So there is huge amount of market as far as domestic, as well as many of the developing and underdeveloped economies, they are also looking at India for their sourcing of this raw material RE components. So therefore, despite having these challenges, we believe that this market is going to continue, and till we reach that self-reliance. And moreover, look at, we need 500 gigawatt by 2030, and then again 2047 to look at as a developed economy. And we need energy for everything for development. And we have learned from the past that we need to heavily rely on clean energy. Therefore, this, despite having the challenges in solar, we are confident the trend will continue, and definitely Government of India, the way they have handled the sector, they're going to continue with that.
Mr. Das, talking of numbers then, and after 18 quarters of decline in your NPA, this is the first time that your NPAs have gone up due to the waste energy project. So will there be any resolution of this particular asset that you're looking forward to, or what is the way forward?
Yeah, first of all, let me clarify that concern. There should not be much concern on that. In our total portfolio, hardly 1% is waste to energy. And this happened with one particular group, and they are taking up all other measures to come out from that. And we believe that since waste to energy project is not simply economic criteria, it has a lot of socio-economic impact in it. So a lot of gap funding government considers, and in that particular projects of the group, raw material tie-up was there, offtake agreement with the state utilities is there, and gap funding by our ministry as per their eligibility, that was also given. and that time was expired, and the government has already extended that gap funding period also. So technically, this is as per the RBI norms, it was not meeting that criteria, so it is gone. And this impacted during COVID time the project execution because of importing machinery and other things like that. And we believe that the group will take all-out measures to come out from that. And again, waste to energy is also given a thrust by our government to improvise that Kachra to Kanchan, that kind of theme is there. And we have enough opportunity in that area that probably that sector was not looked into that economic and socio-economic angle point of view. Only economically, if you see, those projects are not at all viable. But by and large, a lot of projects we have funded earlier also, and all are doing well. And this particular group, which it has happened, we believe they will come out sooner or later.
Okay, Mr. Das, great to have you on the show.
If you like this video, then like, share and subscribe to ET Now.